Let's just talk briefly about some of the vehicles that, and by the way, the reason for putting this up here, I want you to go away, think about it, research it, come back and ask questions if it's something you want to know a little bit more about, but it's important that you understand what are the different vehicles that you possibly could look at from an investment point. We all know in terms of asset classes, at a simplistic level, there's only 4, right? Put some money into a bank, term deposit, etc., buy some shares, superannuation, and of course property in terms of a class. Now, where can you put those particular asset classes in terms of a vehicle? Some of the things to go away and look at, self-managed super funds Nicole talked about earlier, right? Great vehicle in terms of perhaps retirement strategy, which it has to support, but also from a capital gains perspective, right? Because come retirement mode, that, say, investment property, if you're going to sell it and realise some of that capital growth, you don't pay any tax on it, okay? Things like NRAS, so National Rental Affordability Scheme, in your folders, there's a green, I think it's a 2 or 3 page document, well worth a read. It has an example of buying a property with National Rental Affordability Scheme on it and one buying it outside of, and what's the difference in terms of the net tax benefits to you. Again, well worth having a look at. Some of the other things I like to look at, for example, trusts. Family trusts, I have one. Why? Because the kids are listed as a beneficiary of that family trust, right? So it has property, it has shares in it, it has other assets sitting in it. Now they are listed as beneficiaries, so I'm again in that medium term, I'm catering for and looking after what is my number 1 priority, which is family, right? Longer term, all those assets will continue to grow, which is terrific. We'll support retirement, and you know, I'll go play golf or do something else. But in the medium term, I have some kids there that are looked after, and coming back to Nicole's point, what if something happens in the short term? All right, they're catered for. Of course, in personal names you can do, compounding growth I talked about. Companies is the other one. We still have clients who will buy it in a company because they might have perhaps some, if you're self-employed, where they might have some losses that have accumulated in a company, and they want to buy an asset and put it in there and offset some of that. Again, specific strategy for a client.